2021 is almost over, and now is the perfect time for your end-of-year financial checklist. So the first thing we're gonna go over is tax deadlines. These are all the things that you need to do before December 31st if they apply to you. So the first thing, if you itemize, is pay expenses for itemized deduction. So that's gonna include charity, property tax, and any high medical bills. Also, if you're self-employed, establishing a 401k and funding it before the end of the year could help reduce your taxable income. Now, if you're not able to fund the 401k before the end of the year, then a KEO plan may work for you. And all you need to do for that is just establish it. As an employee, if you contribute to a 401k, 403b, or a retirement sponsored plan, you wanna make sure that you make your contributions before December 31st. So for those of you that have been a little too aggressive contributing to your IRA, Roth IRA, or qualified plan, you wanna make sure that you take out those excess contributions before December 31st so you avoid any penalty. Let's talk about deadlines for required minimum distributions. When do you take a required minimum distribution? Well, the first year that you would have to take it is the first year following the year that you reach age 72. Now, if you fail to withdraw the RMD or fail to withdraw the full amount, the amount not withdrawn is going to be taxed at 50%. You don't want to be taxed at 50%. So it's very, very important that you make sure you take out the full amount. Now, what do RMDs apply to? So they apply to employer-sponsored retirement plans, traditional IRAs, SEP IRAs, simple IRAs, Roth 401k accounts, but not Roth IRA accounts where the owner is still alive. So the next thing we're going to talk about is employer-sponsored retirement plans. For those of you who are still working, you want to listen up. The deadline to contribute is by December 31st. So for those of you that have a 401k, the maximum deferral limit is $19,500. If you're over 50, it's an additional $6,500 for a total of $26,000. For those of you that have a simple plan through your employer, the max you can contribute is $13,500. If you're over 50, you can contribute another $3,000 for a total of $16,500. So for those of you who are business owners and you have a defined contribution plan, the maximum contribution for 2021 is $58,000, plus the catch-up for when you're over 50. Next up on the checklist is tax loss harvesting. So tax loss harvesting is when you own a stock or a mutual fund or ETF and it goes down and you sell it at a loss. Now you're going to invest it in something similar so it still stays in the market, but that loss that you take is going to be able to offset any capital gains that you have in the future. And that's why tax loss harvesting is a crucial tool for reducing taxes. Now, tax loss harvesting can be done in your non-retirement accounts between now and December 31st. Last on the list is Roth IRA conversions. Now, Roth IRA conversions is not going to save you money in taxes today, but we all know where taxes are going to go in the future. Now, what is a Roth IRA conversion? So a Roth IRA conversion is taking money from a traditional IRA or traditional 401k and moving it or transferring it into your Roth account. Now, the action of doing that is going to cause tax. Now, what's really important is you want to make sure that you do a tax analysis to assess and make sure you are converting the correct amount for your individual situation.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.